When I think about what a developing trader needs, everyone's always going to look for that simple. Give me this one, two, three, very quick, really easy setup that I can just go into the marketplace. I can see it all occurring and step by step to make money. And that's not really realistic at all. And if it was realistic, I would have done it. I Believe me, I put a lot more work in than a lot of people, and I was not the exception. You are only the exception once you do the work, but the correct work. And that correct work is submitting to time, building your trading model, backtesting it, and going through that process. Now, we've already gone over how the model is the way for us to identify the order flow, align ourselves with it, and have price reach its expected terminus with us in a position. But what we really need to be able to combine with it is how market structure relates to that order flow, and how when you combine those two things, it creates a story. And the story is something that we can internalize inside of the marketplace and say, this is the narrative. This is what's going on. This is what's being traded to. This is what's not being traded to. And based off of that, based off of what's being respected, what we've done, this is now what I can expect price to reach for. And having that idea in mind, you're able to get very, very precise results and be a lot more calm. You're not going into the market wondering, I wonder if I'm going to win. I wonder if I'm going to lose. Because you know exactly what you're looking for. The only thing that's not a one, two, three setup, and that's gained by experience, is the narrative and understanding the narrative through backtesting. And so that example, perfect example, is Friday's price. What occurred on Friday is such a good example of what's not being traded to, what is being traded to, and what does that tell us in price. So let's go over that now. Market structure is just one cog in the machine, and it's really pretty useless without understanding narrative and how market structure itself helps to understand narrative. And so what we have to look at is, where is price coming from? At what time? At what time did these things occur? So for example, when we're looking at this chart inside of here, we see that London session didn't create the Judas swing. We see London session actually start the continuation. So that profile for us, I'm not looking for a run down into London just because we have lows inside of here. Why? Because we have TGIF. The market has been bearish all week long. People want to become bearish. They want us to trade down to that low. So if everyone is bearish, I'm not going to want to trade with them. I want to be contrarian to them. I want the marketplace to say, oh, look, we're going lower. Or saying, look, where's relative equal lows? Where do people see these support levels at? Where do people see resistance? Well, before we trade down into these lows, where do I think we're going to trade? Well, we're not just going to allow everyone who's short to be in their positions. We're going to want to stop them out before turning it lower, if we are going lower. So into open, we see on this daily chart, top-down analysis, price has traded perfectly to 50% of that wick right there. And now we see the reversal start, London creating the reversal for TGIF, and we have here. So whenever we have a large expansion like this, I'm never really looking at these overnight lows inside of here. I'm focused on these relative equal highs and using that Wednesday wick low here, like that, and saying, how do we climb that? Are we using the quadrants like a ladder? And obviously, we do that here. We use those quadrants as a ladder and work our way higher. But going into open, we have to take into time and price theory. 7 o'clock starts what? The pre-market session. So that pre-market session is where I'm beginning to look at that liquidity that's being formed. Yes, it's a little bit before, but I'm going to include that high right there. But that high is relative equal with that. So what am I looking for? I'm looking for those highs. That's a very easy low-hanging fruit objective. And then you have the buy-side liquidity from the time of New York AM session from the previous day right there. Now we have relative equal highs, relative equal highs, relative equal highs. What do I want to see? I'm not expecting price just to run right into those highs off open. This, for me, is technically not right off open because of that high time frame fair value gap. But we have Thursday's first presented throughout here. We have all of the highs, and I want to see some measure of manipulation. So I'm looking at this move lower here into a very old new week opening gap, but at 9:30, price wicks up into that first presented from Thursday, drops down, creates a short-term low. Price trades back up, hits 50%, closes down inside of that high time frame fair value gap. Price then opens, wicks that low, creates an intermediate term low. That's why it's important. Short-term low, creates the intermediate term low, and then price rallies higher. But what happens? If we're expecting to be bearish, we don't want to see this first presented from Thursday be traded back to. Especially, we don't want to see it be traded back above 50%. So I know as that's occurring in price, as that wicks right down into there, and I see it start to rally all the way back up, that's the manipulation. What is price working inside of that? It's working discount price. All of that's discount. So that discount price inside of here, once we start trading back up higher, we have that inversion inside of Thursday's first presented. I'm saying that right there's my entry, and that's where we entered. It's on my Twitter. We saw that happen in real time. Price wicks up, trades up higher, entry, price target at the relative equal highs. Very simple, very quick and easy trade. Now, when we're looking inside of all of this price, what has been taken and what hasn't been taken? Well, we have the high time frame fair value gap, and we have these lows. So why not just that upper quadrant right there? Why the lower eighth of above equilibrium or consequential encroachment of that opening range gap? Because we have that low. So there's sell side, everyone being stopped out, high time frame fair value gap. Now, what's that high time frame fair value gap, and why that one? So the way I look at price is inside of here at 9 o'clock on a 3-hour chart. We have a new power of 3, price delivery continuum. That new power of 3 opens up at 9 o'clock and closes at 12. So when we see that price open and it drops down to where? That new week opening gap high, that eighth 0.375, and we take out all the liquidity with the expectation of higher price. We're using now that market structure being formed to say, okay, we're bullish. Here's the low. Now it's trading up. There's my narrative. That power of 3, accumulation, manipulation, distribution, playing out at 9:30, the time we expect it to, not before open, but here. Now I have to look at that order flow. What's the order flow telling me? What are these bodies saying? How the bodies are closing at that upper eighth, how price is failing to get to that opening range gap 50%, how we're taking out that low, and how we have a very strong wick right back up into it. From there at 1.5 to 64, little over 60 points, rallying all the way back up. That's not showing me weakness. That's the order flow. That's the narrative. That's using the market structure here and here with that 3-hour fair value gap, using that 3-hour candle as power of 3, buying that wick low of it and selling it at the buy side. It's that simple. That's not overly complicated. Is price action throughout here using these gradients, these graded PD arrays as a ladder. trades up, optimal trade entry back at Thursday's first presented, then trades back up, uses that, uses it, uses it, uses it, all of it. Very, very basic, and then combine it with the correct times. 10:50 to 11:10, 9:50 here to 10:10. So all of those low resistant moves are happening at the time that we expected to, the times that we've already gone over. So a pretty self-explanatory day overall. The biggest thing and the biggest takeaways are how we're not trading to 50%. That order flow. What is that order flow saying? That's showing the strength. It's showing the strength. Do we have any want if we extend that out? Do we have any want to trade back lower here? No. Look at the bodies here. Look at the bodies here. Look at how we're trading up higher. And then after we trade back down into here, what happens? That's when we start using the quadrants as a ladder. Why are these relative equal lows being left? Well, obviously, we have first presented right here. When we have a large first presented like that, I don't like drawing it on my chart. Things get too messy. But all that's doing, when are relative equal lows going to be left? When we're seeking a discount pricing at a specific PD array. That first presented has that wick right up here. Wednesday's wick right there. 0.875 at 825. Zoom in. That's what it's pricing to. How do you know that's the good fair value gap? Because it's right there. Now, technically, you have to make the continuation of it like that to extend it. But regardless, all of that, what's being traded to, what's being respected, what's being disrespected, that's order flow. Not level 2, not time and sales. And by the way, before I traded ICT, I learned time and sales. I combined level 2 with time and sales so I could see all the orders. I know all about the signature prints and all of those price levels, and I'm better than everyone else at it. And this does not even, it's on a completely different level of level 2 time and sales and actual order flow. The market structure, understanding the narrative, understanding the lows, why the lows are being left, the intermediate term lows, the long term lows, the short term lows, the basis of Cairo, right? The basis of Cairo, when price is trading to a short term low, trading through that short term low into a higher time frame PD array, which we see in price all of the time. That's that basic of the 3 hour right here that we traded right here. 3 hour fair value gap, taking out short-term lows, higher time frame PD array, negates that lower time frame market structure shift, then price moves up higher. That's Cairo right there. That trade today, or I guess 2 days ago that I took, here is Cairo. That's the narrative, that's the market structure, that's the order flow. That's the basic idea of how I know what's occurring, why it's occurring, and how I'm internalizing that price action. And it's really easy for you to do. All you have to do is dedicate a couple hours a day to backtesting and to journaling and to watching price live and going in with a specific purpose. And over time, you'll be able to look at it that exact same way. But the first step is being able to develop a trading model that really fits you, that you really understand and know inside out. And that idea gives you the freedom. That's how you can trade from anywhere on the basis of your model, submitting to the time and growing and developing it. But until next time, be safe, God bless, and we'll talk soon.